I think we have Nilesh Shah, who's with us now. Nilesh, of course, is with Kotak Mutual Fund. Nilesh bhai, good morning. Great to have you with us here. Prashant this side. Your first thoughts, Nilesh bhai, what you've seen overnight, the developments, and what do you make of it?
So, after the terrorist incident at Pahalgam, did India had any choice? For decades, Pakistan have been resorting to terrorism as official policy, and we were tolerating them. Even in the dear city of Mumbai, when there was an attack, we did respond. So as a citizen, you feel happy that finally we are teaching a lesson. And I hope and pray that Pakistan learns from their mistake.
Nilesh, hi, morning. Thank you so much for joining us early. Just allow me a moment, giving a little, some more cues to our viewers. We've already told you about the GIFT Nifty. Yesterday, by the way, all of this started, the market had started showing that decline in the afternoon itself, and then the bigger fall happened after 2:45. And that showed up in both the currency markets and the equity markets. Despite that, by the way, the net figure by the end of the day from the FPIs was still positive 2008 crores. And to be fair, in this entire period, right from the 22nd of April, they've remained on the buying side as far as the Indian market goes. We'll see if that changes and what that implies. But anyway, that's the number from yesterday. One more point on currency, just to remind you that we have to look at the currency opening as well carefully, because yesterday this, like I said, showed up in the currency markets in a big way. The rupee ended down 1%, but if you look at the morning high, the rupee had actually appreciated to as high as 84.25 thereabouts. So from that level, the decline was even greater. Let's see, how we deal with some of these issues. And finally, very quickly, the business community has started responding as well. We had statements from the Mahindra Group yesterday. We had statements from Mr. Mukesh Ambani yesterday, and both of those groups pledging their own support in whatever way possible. There we go. We have the Mr. Ambani statement there on the screen as well. Standing in solidarity with our armed forces. Nilesh, so this is a fast-moving situation, fast-developing situation. For investors who are watching this, what would your advice be, at least at this point in time?
Surbi, as you very correctly mentioned, this is fast-developing situation. Markets will react as events happen. We don't have experience of 62, 65 and 71 war, but we do have experience of 99 conflict. Somewhere in March 99, when it was discovered that Pakistani soldiers are occupying our territories, markets started correcting in anticipation of a conflict, in anticipation of a war. Overall market came down about 15%. Then India responsibly stated that we will not cross LOC. Market started discounting limited conflict. And before the first shot was fired on 3rd May 1999, market had recovered about 8% of the losses. Throughout the conflict between 3rd May 1999 to 26 July 1999, market continued to rise, partly driven by valuation and partly driven by limitedness of the conflict. So clearly, events will drive the market. The only submission to investor will be, don't fall to the propaganda, don't fall to the disinformation. Follow your asset allocation dharma. Our long-term growth story remains fairly intact. And if this war is limited to limited conflict, then probably every correction is a great opportunity to buy.
Yes, and Nilesh, once again, appreciate you joining us here. As you pointed out, we need to be very, very careful about the disinformation war that is currently underway. And we've been putting out, as you can see, flashing on our screens, our colleagues have been reporting as well on the many false claims that have now been debunked. But Nilesh, speaking of events as well, and an important event that's going to take place later today is a meeting of the IMF. And yesterday, in fact, the Foreign Secretary, Vikram Misri, made it very clear that the Indian representative at the IMF, Parmeswaran Iyer, will, of course, oppose tooth and nail any further grants to Pakistan. But Vikram Misri also using the opportunity to call out other nations and say, look, do you really intend to support terror activities and terror nation? So from an economic And for Pakistan, IMF and World Bank aid and grants and loans are significant from their economic futures point of view. So in addition to, of course, what is happening on the border, etc., some of these other important developments, I also pointed out diplomatic back-channel conversations. The Saudi MOS for Foreign Affairs here in India met with both the Prime Minister as well as the Foreign Minister. What else will you be looking at in terms of being able to piece this together, Nilesh?
So, Shireen, if you remember, on 26 July 1999, Monday morning, there was an announcement from White House where President Bill Clinton and Prime Minister Nawaz Sharif announced de-escalation, Pakistan vacating the heights of Kargil, Dras and Batalik, whichever they were occupying. Majority were already captured by India. It was a combination of military attack by India, military movement by India, and finally Pakistan realizing with America's intervention that in today's day and age, this kind of operation will not be sustainable. So it was a combination of diplomatic and military combined, which resulted into successful closure. Similarly, here also we need all the global allies to come together and pursue Pakistan that this policy of terrorism, this policy of 1,000 cuts bleeding is not appropriate. If we can get a diplomatic solution, undoubtedly it is good. And we will need all the allies to come together. But at the same time, we'll have to keep on also putting pressure in terms of our non-escalatory responses so that finally Pakistan realizes the error of pursuing the policy of terrorism.
Yes, and that certainly is the hope. But going by previous instances and past history, that is not certainly something that we've seen play out. So as you point out, it will be important to see what kind of pressure is exerted on Pakistan at this point in time. Of course, we've also seen that comment coming in from the US Vice President J.D. Vance saying that, look, it's between India and Pakistan. The US really has no role to play. But separately, we also know that Marco Rubio, the Secretary of State, has been in conversation with Jaishankar as well as Ajit Doval. So it cannot be a hands-off approach. But Nilesh, from the market's point of view, and of course, we will wait to see how all of this plays out. What should investors do at this point in time? There is, of course, this immediate situation to contend with, but there are many other developments that have taken place and are likely to take place, especially when we talk about trade, etc. How much of this now becomes an overhang on that?
So, today Indian economy is truly oasis in the global desert. Thanks to rupee appreciation, we overtook Japan to become fourth largest economy. Certainly, over next couple of years, we'll become third largest economy. The Indo-UK FTA is a win-win situation for both India and UK. It will allow us to compete in areas like, for example, ready-made garments and electronic components, where we were not as effective earlier. If Indo-UK FTA is harbinger to what's going to happen between Indo-EU and Indo-US, then it does give serious shot to China plus one opportunity for Indian manufacturing sector. If we look at near term, the March 25 quarterly results so far has come ahead of expectation. Good results come first, bad results come little later. But overall, the March 25 quarterly results are well ahead of expectations so far. More importantly, foreign portfolio investors have started buying. They became buyer in the month of March from passive side. April was largely passive and little bit active. But in the month of May, we believe it is more driven by active investors. It's a vote of confidence on Indian economy and Indian market, despite this kind of geopolitical situation. So I will say today, Indian markets, subject to escalation of this situation, does provide great opportunity for investors from fundamental point of view, as well as from the flow point of view.
No, I think very well summarized, Nilesh. Just a quick point, and I just want to quickly emphasize that quote from J.D. Vance, and the graphic will come up. We've been highlighting that since the morning. If you think about it, it's quite incredible. I think Nilesh also earlier mentioned, the 99 Kargil war and how that sort of came off. It was a mix of escalating to de-escalate, military side, but there was also diplomatic efforts, which the US also sort of stepped in. So in that context, what we are seeing now is in line with, this America first and almost an isolationist kind of a policy, which we are seeing, a more multilateral world, individualistic in that sense. And J.D. Vance, I mean, if you got to go online and watch that sound clip as well. And he basically saying that, well, it's not a problem. We won't get into the middle of it. Of course, we don't want it. We'd urge both sides to de-escalate as quickly as possible, but we will kind of stay out of it. So this is the other sort of angle of, how different things are compared to what we're used to over the last 50, 55 years or so, post-World War II. The other bit, of course, is the Saudi issue, the Saudi bit, right? I mean, what Shireen was talking about earlier, which is the fact that the Saudi minister was here. He met Dr. Jaishankar. And I think Mr. Mistry, the Foreign Secretary, in that briefing yesterday evening did mention that meeting has taken place, but he briefed the media once he has more details in terms of what happened. And that is important because, Saudi Arabia is one of the largest donors, largest funders of Pakistan. I mean, the common joke is, and I'm saying it, and I'm not saying it new. It's not nothing new. It's a joke made by many Pakistanis themselves that any prime minister in that country, a new leader when he's elected in Pakistan, they go to the Middle East first. I mean, that's the first trip that they will make. It's usually cloaked under the veil that they're going to do Umrah. But actually what they're doing is they're going to meet the Saudi leaders, leaders in the UAE, etc., and they are basically asking for money. In that context, this meeting with the picture is up on your screen, Dr. Jaishankar meeting with the Saudi minister is significant in terms of leverage that we can use to kind of sort of pressurize and put pressure on Pakistan. Nilesh, I don't know if you have any thoughts on both these aspects.
So, one, clearly, Saudi relationship is very, very important. They are one of the largest supplier of crude. And over the years, our relationship has grown strong. In the entire Middle East, millions of Indians work and send remittances. And they benefit from our labor as well as intelligence. This relationship has grown stronger over the years. And clearly, while we pursue the military side, we should also pursue the diplomatic side to obtain desired results. And what a swing in America. In 1971 war with Pakistan, they had sent their dreaded Sixth Fleet to the Bay of Bengal. And today they are saying that, look, it's not our job to intervene. We just hope and pray. And we will use diplomatic means to ensure that cool heads prevail in India and Pakistan. That's a significant change in US behavior.
Well, Nilesh, good morning and good to see you in this morning. Nigel on this side. Nilesh, matter of pride, right? That our armed forces are protecting us so that more than 100 crore Indians can go on with life. It's a matter of pride and salute to all of them. But getting back to the markets, as you said, the FI flows have started trickling in, which is good news, right? And nearly around 9 out of 10 instances in the past, when India and Pakistan have gone into battle, the FI flows actually have stayed positive, which is a good sign. What about the domestic liquidity? Because now they are a larger player in this market. Could you give us a rough number? What is the domestic liquidity that mutual funds are sitting on? Because that could be the firepower that's needed in the days to come.
There are three pockets of domestic liquidity with mutual funds. The first is the cash which we keep to manage day-to-day redemptions. On an average, that is roughly about 5% of our equity funds AUM. So including equity and hybrid, we'll have about 40 lakh crore. 5% of the same give and take will be about 2 lakh crore. If market continues to become cheap, attractive to invest, we can reduce this cash balance significantly. The second is what we call as asset allocation fund. In those funds, we can buy equity if market becomes cheaper. We can sell if market becomes expensive. This is combination of asset allocation and balance advantage fund. Today, roughly based on where our equity allocation is and tomorrow where it could be if market falls, that number will be roughly about 70,000 crore. So about 2,70,000 crore is the cash in hand to buy in a falling market, in a cheaper market. Now, please remember, as a fund manager, my job is to buy at the best possible price and at the best possible valuation. If I see a desperate seller, I'm not going to give exit to them. I will lower the prices as much as possible so that I can get it at the cheapest possible price. The third is the SIP flows. Every month, thanks to the effort of our mutual fund distributors, roughly about 26,000 crore worth of flows comes. And that adds into this kitty. If we assume over next 12 months, 26,000 into 12, roughly about 3 lakh crore kind of flows will come from SIP. And most of this SIP as of today looks like will sustain. So there is enough liquidity with domestic investors led by mutual fund to buy into a falling market. But as I mentioned, our job is not to give exit to desperate sellers and maintain prices. We will buy at a lower level. And once that selling is over, market will bounce back.
Nilesh, I'm glad you mentioned that, and coincidentally today is the monthly MF data as well. We're expecting flows to come in. Just leave us with some rough estimates, because while the SIP book has been steady and that gives you all the firepower, what's also a reality is that last year Diwali flows were almost 40,000 crores net, equity flows that were coming into the system. That number dwindled down to, I think, 27,000 crores as of the last number. Your expectations today?
So, Surbhi, earlier, FPIs used to be driver of the market. Their buying will pull the market up, their selling will pull the market down. Now, that has shifted to retail investors. They have been regularly investing via SIP, but through lump sum buying or selling, they are also averaging and profit booking. Whenever markets have risen thanks to FPI buying, retail investors have booked profit. And whenever they have come to sell desperately, last time was on election result day, they have come aggressively to buy. So there is a fair amount of balancing done by retail investors. Kudos to their maturity. They are truly following the dictum, buy low, sell high.
All right, Nilesh, thank you very much for that. Appreciate you joining us today morning. And we'll be in touch for future conversations as well.